Welcome to our webcast, a short video interview offering you the chance to get acquainted with one of NN Investment Partners professionals. In 2015, quite the roller coaster ride the first quarter. Take us through some of these moving parts.
Well, in the first quarter, world equity markets roared ahead. The MSCI All Country World Index rose indeed over 15%. And we finally saw some divergence between the central bank policies. And this was triggered by the fact that the European Central Bank started quantitative easing, while the US already has stopped quantitative easing. And so Europe did somewhat better than the US in the first quarter. And the star performer in the first quarter was actually Japan, which is also fully involved in quantitative easing. And this benefited our Japanese asset inflation theme a lot in the first quarter. All this central bank policy divergency caused some currency volatility. So the euro fell sharply against the US dollar, but also the Swiss franc rose sharply against the euro. And this was because the Swiss had to let go of the peg against the euro.
Right. You touched upon Europe, US, Japan. Let's touch upon China. Hong Kong stocks rose sharply. Who or what was driving this run?
Especially in April, the mainland Chinese, which are now allowed to buy stocks in Hong Kong, really bought those stocks in April. And as you said, the Hong Kong market rallied sharply. And some of the stocks, also some stocks that we have in portfolio, rose more than 50%, more than 50% in a couple of weeks. And well, we tend to say that theme divergence doesn't come gradual. And this was a point in case, because after years of underperformance of these shares, we saw suddenly that they performed very, very well. And this benefited our economic growth theme a lot.
You mentioned a lot of changes. How did all of those changes translate into the performance of the fund?
Well, the performance was very good. We beat the benchmark slightly in the first quarter, but in April we beat the benchmark by a lot, and this was on the back of the strong China performance. So the fund is having a great start of the year.
What is it that you're now taking into account? Is there anything that you're waiting to happen in the next quarter that you may want to incorporate into your fund?
Well, we expect that the divergence will continue for actually for the remainder of the year. And this divergence is causing a stronger US dollar. And a stronger US dollar in general will be somewhat negative for US shares, while it is positive for European and Japanese shares. But also in emerging markets, we see political reforms happening in China, Indonesia and India, which is supportive for these markets. And also in Japan, we see finally some evidence of inflation, which is also supporting the Japanese markets. In general, we expect that in the longer term that fundamentals will drive the direction of stocks, and we expect that we can beat the benchmark by selecting the best themes.
Looks like we need to take a good eye on the currency fluctuations. Thank you very much, Dirk-Jan.
Thank you.
And if you would like to find out more about our strategies, do please visit us at nnip.com.